Children, we are going to start our new chapter today, that is admission of a partner. For this, we have done fundamental of partnership form and we have done change in PSR. There we have calculated how to calculate sacrifice ratio and gaining ratio. Here we will learn the accounting treatment of chapter admission of a partner. So, why a new partner is admitted in a firm? Sometimes it is admitted to have some skilled person in the business, sometimes to have some more capital, or sometimes for increasing the goodwill of the firm. If a new or experienced new partner is experienced person who is already having his goodwill, then his goodwill is added to business. That's why at that time partners are admitted. But whenever any partner will be admitted in business, there is a term that all partner must agree. Here majority will not work, that out of 4 3 are agree then partner can be admitted. It is not possible. If all the 4 or all the 3 partners are agree to admit a new partner, then only the new partner can be admitted in the firm. So there are different accounting transactions in case of admission of a partner. So let us do the listing first. What are those? First one we will understand, that is calculation of new ratio and sacrificing ratio. While explaining change in PSR chapter, I have taught you these 2 points there. There you can see, and along with the chapter also we will do. And even then if you face any problem, I will make a separate video on the calculation of ratio. Second is accounting treatment of goodwill. Third is revaluation of assets and reassessment of liabilities. This is very important topic. We will do it thoroughly. I confirm you, if you see the video properly and do practice, you will have all the clearance about revaluation account. And if your revaluation account is correct and confident, you are confident about revaluation account, means you can do partnership thoroughly. And accounting treatment of reserves and accumulated profits. If you remember, we have done this chapter in this topic in change in PSR chapter. So these videos are available. I have explained so many questions and thorough revision is there. So this topic you can revise from there. You can refer to that video and easily you can do. If you want me to send you the link of that video, I will add that in description. Last is adjustment of capitals. In adjustment of capitals, we are having 2 points. Okay, one is determining or finding the new partner's capital on the basis of combined capital of old partners. Means on the basis of old partners capital, here new partners capital is decided and accordingly adjusted his capital. Okay, so this is the first term. Second term is adjusting old partners capital on the basis of new partners capital. It means here old partner's capital does not change. New partner's capital is decided accordingly and he brings the said amount. Here new partner's capital is brought in first and old partner's capital is adjusted according to new partner's capital. These are the two conditions, and these two conditions students find very much complicated. But if you have proper practice of accumulated profit and reserves, and you have command on treatment of goodwill, you have command on revaluation account, then this is not a big deal. I will teach you in such an easy way that you will be able to do it easily. So no need to fear about admission chapter. It has good weightage in board examination. You find in either or question also. Sometimes you find one question for admission and another for retirement. There also you can choose. So admission chapter is having a good weightage. If you have command on admission, it shows that you have command on whole partnership topic. Okay, so let us proceed now. This first topic I told you we have done in change in PSR videos. This second topic I will teach you in questions. Third topic, revaluation of assets and reassessment of liabilities is our focus point, because this is the core thing of admission of a chapter. If you don't know how to calculate revaluation money, then you cannot find the chapter to be easily done. So let us start with revaluation account. Okay, so revaluation account, I first explain you what is the concept of revaluation account. First of all, see revaluation account, what is the nature of revaluation account. In standard 11 we have studied there are three types of accounts: personal, real and nominal. So nature of revaluation account is nominal. It is a nominal account. Okay, so what was the rule regarding nominal account? Nominal account says debit all the expenses and losses, credit income and gain. So same is with revaluation account. On debit side it takes losses on assets and liabilities. Loss on assets and liabilities. Okay, so and on credit side it takes gain on assets and liabilities. Okay, meanwhile let me tell you regarding goodwill also. I have made one video where I have explained what is meant by self generated goodwill and purchased goodwill. Okay, so in full question again I will teach you related to specific questions of admission, how those are solved. Okay, so here revaluation account records losses on debit side and gains on credit side. Now the question arises, when there will be loss on assets. So assets will have loss when its value will decrease. That I code with A minus, means when there will be decrease in the value of assets, and liabilities loss will be when there will be increase in the liabilities. So A minus and L plus will go to debit side. From each side I am teaching you. I have taught you the nominal account rule. I have told you how to see what are loss. Then how we will recognize the loss. Same with the gain. When there will be gain, when asset will increase, means A plus, and when liabilities will decrease, means A minus. So these are the terms. So three types I told you. Which you find easier, you carry on with that part. Now see, so anyhow we have to determine loss and gain. So debit side is all the loss, credit side is all the gain. Now one student asked me that debit side we are writing loss, then why we are writing here to profit transfer? So dear, on credit side we are taking all the gains, debit side we are taking all the loss. If credit side is more, debit side is less, means gain is there. So the left amount is gain. So profit is transferred to partners. That's why we are writing here to profit transfer, and we are writing to partners capital. Means partners capital account is credited. Whenever you find a message from bank, your account has been credited. Means what? You feel happy. Means there is some amount in accounts. In the same way, when partners account is credited, means partners are getting something. If they will have to pay something to firm, their account will be deducted, then they will be debited. In the same way, if loss will be more and gain will be less, Then loss minus gain, the left amount will be loss, so we write by loss transfer. So what will be the pattern? Here we write to decrease in asset. Decrease in asset means how much decrease is there. Many a time children get confused. They take balance sheet amount here. You have to keep in mind that here we need not to take the actual value of assets and liability, because revaluation account itself is not actual. It is an estimated value. Okay, actual nothing sell or any purchase is happened, or neither there is any actual increase or decrease, because if assets are not sold off, liabilities are not paid off, we cannot determine their exact value. It is just one estimated value, that if on this date what is the value of our asset and what is the value of our liabilities. So what we are taking here, we are just taking how much decrease in asset. Okay, we are not taking that what is the price of asset. Okay, so decrease in asset we take, then value of assets, then increase in value of liabilities. So increase in liabilities I am writing precisely. So same thing, decrease in asset I have written A minus, increase in liability I have written L plus. Then any unrecorded liability means what? One more liability has come into notice, so that is also L plus. Unrecorded liability is L plus. Anyhow it is only A minus and L plus. Then on buy side we are writing just reverse of this. Here decrease in asset, so this side increase in asset. Increase in assets. Increase in assets means what? A plus. Then by decrease in liability. Decrease in liabilities. Decrease in liabilities means what? L minus. And then by unrecorded assets. Unrecorded assets means one more asset has come into notice, means A plus. Now after writing all these amount, we have to compare that which side is more, because whenever account word is written means it's a ledger, and if ledger is there then rule of ledger will be followed. So which side will be more, that total will be written on the both side, here and here. Okay, so if gain is more, then we will write here to profit transferred to capital accounts. Okay, and whatever how many partners are there, A, B, we will make this division. Whatever balance amount we will get here, balancing figure, this amount will be balancing figure. So this balancing figure will be distributed among all partner in their old ratio. And if loss will be there, then this side by loss transfer to, same process, loss transfer to capital accounts. And here what will happen, the balancing figure will be here and it will be divided among all partners in old ratio. This will be balancing figure and it will be divided in old ratio. Now tell me one thing, can it happen that in same question loss and profit both are there? It cannot happen. So if profit will be there, loss will not be there. If loss will be there, profit will not be there, and this part will be in all the question. Now it is also not necessary that in every question all these part will be there. In some you will find 1-2 item, in some you will find 3-4 item. Accordingly you need to do that, will be clear with the practice of practical questions. Okay, so in the valuation account I am again explaining once. First keep in mind, evaluation account is nominal account which records assets on the debit side, which records expenses and losses on the debit side and income and gain on the credit side. So loss on debit side, so when loss will be there, when assets will decrease or liabilities will increase. When gain will be there, when assets will increase and liabilities will decrease. Then overall gain or loss will be transferred to all partners in their old ratio. Hope it is clear to all of you. Now let us see the format of capital accounts. Capital account. I am trying to make it easy. You all see and let me know if you find it easy or not. Having any doubt, any problem, feel free to share. Okay, So this is the pattern of our capital account. Okay. So the first item we will write in capital account, that is by balance BD. First item. Okay. I am going to teach you one sequence. See, it is not mandatory to write in the sequence, but it is necessary to write in sequence so that we should not get confused in exam, and we should have clear visual representation of capital account, that these are the items, nothing should miss in exam, that we will take in sequence and it will be in our mind that first I have taken this, now I need to take this. So at home or in classroom or wherever you do practice, you should do practice in the same way. So by balance BD we will write, then all the old ratio items we will take. So what are the old ratio items? Those are accumulated profits and losses, like by general reserve. Accumulated profit loss video is available, you can check, very important topic is there in board exam, many MCQs and short answers, even in full question accumulated profit topics are there. Okay, so see the video and get clear of this concept. So by general reserve, by workman compensation reserve, by investment fluctuation fund, these are the things. Similar things are there by PL account. These all are called of old ratio. Okay, because these are distributed in old ratio. So you can take these items. After that, if profit is there, revaluation profit, then by revaluation account, and in bracket mention profit, so that you should have practice. Okay, then by new partners capital account, whatever new partners name is there, A, B, C we have taken, so C we can take here. So by siege capital, by bank account we are writing in siege capital. So one more column will be there for C, only pattern I am teaching you here. So one more column I am making here only for C. Okay, so by bank account we will take in C. These all things we are taking only in old partners capital, but by bank we will take in siege capital because it will go to siege account. And then by premium for goodwill, when new partner comes, he brings premium for goodwill for old partner, which is distributed among old partner in sacrifice ratio. So see here I am mentioning ratio also, these are in old and these are in sacrifice. So in sacrifice ratio, whichever partner will be sacrificing, like if only A sacrifices, A will get, if A B both sacrifice, then both will get. Okay, so this amount will go here. This will not be given to C because C is bringing and it will be given to A and B, but capital C is bringing for himself, so it will go to C's account. Okay, then this side, if goodwill, purchased goodwill is there, then to goodwill account. Which goodwill? This is purchased goodwill, which you will find in balance sheet. Okay, this will also go in old ratio. Okay, then to, if advertisement suspense account is given, okay, here PL credit balance is there, and if to PL debit balance is there. Okay, and all these things, okay, will go in old ratio. Then if drawing is there in question, drawing and to interest on drawing, these two topic you rarely find in questions, but many a time you find it in examination, and that time you get confused. So keep in mind these two are also capital account items. Okay, after writing all these, total will be done, totaling will be done, and this total, from this total, those will be equal, whichever side is more. In capital account generally you will have credit side more only. Nowadays debit balance are rarely given. In our time, many a time some partners were having debit balance also, but nowadays you are getting mostly credit balance. So credit side capital account will mostly have more. Whichever side is more you need to write, and then what you do, you have to do the balance to balance CD, which you already know in ledger. So this balance amount, whatever you will get here, will go to balance sheet, which we will prepare at last. After this we will prepare balance sheet. So this is the format of capital account. Okay, see once capital account, first start with balance BD, then all the old ratio item, then revaluation profit, then admission process. This is the process of admission. And debit side also old ratio item. Okay, then drawings and interest on drawing, then balance CD. So check once, go through the complete video. What we have done today, have a recapitulation. First, what we have done, we have understood what are the topics under admission of a partner. So there are 5 main topics: new ratio and sacrificing ratio calculation, accounting treatment of goodwill, revaluation of assets and reassessment of liabilities, accounting treatment of reserves and accumulated profit, adjustment of capital. So 1, 3 and 4 already I have made video earlier. 1, 2 and 4 videos are available. 3 revaluation account and 5 adjustment we will learn here. Okay, format also I have explained you properly. You go through. Having any problem, any doubt, feel free to share, because when you share your problem I get motivated to make more videos. Thank you children.